All right. So hello, everybody, and welcome to Investing Education Academy's Wednesday Live. If you're listening to us on our podcast, thank you for actually listening to us on the podcast. Our numbers have been growing. The countries consuming our content has been quite surprising, but for everybody in Spain, Serbia, Egypt, Nigeria, Canada, and of course the US. Thank you for listening. Thank you for continuing to share these podcasts and listen to us and visiting us on YouTube. So the YouTube videos are starting to get much more traction. So if you're looking for us on YouTube, you can search Investing Education Academy on YouTube and our collection of videos will show up. And you can go to our channel, please subscribe and keep the numbers going. So for today, Leon's going to tell you the topic that we have chosen, but we also want to say our membership 50% drop is over. And right before the close of the doors, we have a brand new, many brand new members. So welcome to all. We also recently had someone join, a few people join for the IEA Panther portfolio. And if anybody knows, that's a group of individuals in IEA that we actually invest together. We buy into private equity deals. So we basically buy into companies before they IPO. We look at outside activities to invest, real estate, business acquisition, whatever it may be. And now I believe we're at 12 members. The membership is actually $5,000 per year to be a member of this group. And inside of the group, we're at 12 or 13 members now. When we get to 15, which is only 3 or 2 members away, we are closing the group for an undetermined amount of time. When we reopen, the membership will be $10,000 per year. So if you've been thinking about joining, if you're interested in joining, now's the time. We only, again, have 2 or 3 slots left. So something to consider. All right, with that being said, Leon, you can tell them the topic today and why we chose it. And I'm going to do a little bit of housekeeping.
Yeah, so the topic today is what are stock buybacks and how you can profit from them. And the reason this is a topic today is because a lot of times Brett and I are asked, what do we look for when we're looking for stocks, right? We always say that the basics are the fundamentals, the growing sales, growing profits, in-demand product, good management, right? And also a dividend. Dividends kind of here or there. Dividend is not as important as the other ones, but it's just an added bonus. And a dividend is a way in which a company pays directly back to its shareholders via dividend. A lot of people don't know there's another way that companies actually pay their shareholders back. It's a little more indirectly, and it's called through what they call stock buybacks, right? And we're going to dive into stock buybacks, how they work, how they affect stocks that you buy. And I'm gonna show we're gonna have a pretty interesting stat at the end that blew my mind, like completely blew my mind. I knew the power of stock buybacks, but I didn't know they were potentially this powerful. So towards the end, right at the end, I'm gonna tell you the stat that just really surprised me. So Brett, when you get a chance, you can throw up the slide number 1.
Yep.
And just another point is that once after we go through the real reason we're showing this is, like I said, when people ask us what to look for, stock buybacks is actually one that you can kind of put in on your checklist to look for, to look to see if any particular stock has what they call a stock buyback program. And the reason is, you're going to see in a minute, they are very, very, very powerful. And as I said earlier, one way that companies pay shareholders directly is through dividends. But another way they pay us indirectly is through stock buybacks, and you're going to see why in a minute, and how they're so powerful, and how they actually return capital to shareholders. So first thing, of course, is what is a stock buyback, right? So a stock buyback, Brett, could you zoom in once, make that one size bigger?
If I do, you probably won't see half of it, but I'll
try once and see. That's good. Yeah, right there. No, go back 2.
Go back more than what I moved it?
You look how you did, right? Go back, click the minus button twice.
I can only do it one time.
Oh, now click it once.
Yeah, that's once.
Oh, okay. All right. Cool. All right. All right. So the question is, what are buybacks, right? So buyback, they're simple, right? They are what they sound like. It's just simply when a company buys back its own stock, right? So the company, say, for example, Microsoft will go into the open market on the stock market the same way you and I buy stock, and they'll buy back shares of their stock, right? For them, it's a buy back because it's their shares that they're bringing back. When you and I buy, we're just buying stock. So they'll buy back their stock. And one thing I want to think about is that, like when we as retail investors, quote unquote retail investors, buy stock, we're playing with maybe a few thousand, maybe a few 100,000, maybe a few million, right? Depending on the size of your account. But when companies buy back their stock, they're spending tens of millions, sometimes hundreds of millions, sometimes billions of dollars to buy back their own stock. And think about it. What moves stock, right? Supply and demand. If you have a company the size of Microsoft, which right now is worth $2 trillion, if they went to the market and said, okay, they want to buy back X amount, number of shares of their stock, and they're going to execute that using hundreds of millions or billions of dollars, that's generally going to move the stock higher because that's a huge buyer coming in to buy the stock. Of course, they're buying it back because it's something put out there, but it's no different than you and I buying. They're just buying the stock, which can push the price up, right? So that's one way. That's one way stock buybacks help us. The next way is what happens is once companies buy back the stock, they actually remove it from the market. They remove it from circulation. These shares are no longer outstanding. So if Microsoft went to the market tomorrow and said they bought back, 2 million shares of their own stock, that stock would be removed from the market and would no longer be in circulation, right? And what we know about, through Business 101, we know that anytime you have demand chasing fewer assets, the price of that asset usually rises because now you have more people chasing fewer assets, and again, the price can rise. So that's another way that stock buybacks can boost share price, again, helping us as investors. Third bullet is basically talking about scarcity, right? So scarcity is kind of like what it said about bullet number 2, is that once these shares are bought, they're then removed from the market, which lowers the supply side or the asset in the market that we can buy, make it more scarce. So again, you have a lot of people chasing fewer assets, which then can drive up the price of the stock. And this is where buybacks are really, really powerful because again, we're not talking about a few shares. We're talking about massive companies worth billions or even trillions of dollars buying back huge amounts of stock at one time. And then when I say one time, they do it. So a lot of times they do it over months or even years. But it's sustained buying day after day, month after month, year after year to buy back these, hordes and hordes of shares worth sometimes millions or even billions of dollars.
And real quick, look, I want to give you all, for anybody listening, as we talk about the buybacks and the power of buybacks, there's always a little caveat in there, and there's always the reason why Leon and I say do your research. Sometimes in a, I would say minority of situations, but still it happens. So we want to make sure you're aware of it as we educate you on the benefits of it. Some companies, especially for you investors who are out there chasing these penny stocks, and for you all who don't know, penny stocks or any stocks are traded between $5 and $0. Those are considered penny stocks. And you oftentimes hear people say they're looking for a penny stock, and those are the get rich quick people, right? In that space, buybacks don't mean the same thing they do for more established, powerful companies. It actually probably means the opposite. In those situations, if a company is starting to buy back their shares, oftentimes it's because they don't want to become delisted. And there's certain requirements on the exchanges as to the validity, or actually the cost per share has to be above a certain amount in order to stay listed. And so if that is in threat or being threatened, a company will buy back your shares because it then increases the cost per share because it multiplies times the amount of shares it buys back. But that's a whole nother calculation. So just be aware that there is a dark side to it. And normally it's for those people who are chasing penny stocks. When a buyback is happening, it's oftentimes because the company is crashing and they're trying to buy back their assets just so they can stay listed on an exchange.
Yeah, and like Brett said, those are used typically for those smaller kind of like penny stocks. If you hear about Microsoft, Home Depot, the big stocks, the stocks we're all familiar with. If you hear they're buying back stock, so the reason why companies typically buy back their stock is typically the main reason they buy back stock is they see their stock as undervalued, right? So they're saying, okay, it's like anything. If you see a stock that's down in price, and you feel like it's undervalued, you'll then go in the market and buy it. Same thing with a lot of these companies. They'll say, if it's Microsoft, and for whatever reason, their model say their stock is worth $150, but right now it's trading at 100. They'll jump in the market, buy back their stock, again, retire those shares, and then maybe at a later date reissue them at a higher price. But for that moment in time, those shares are retired, they're removed from the market, which then lessens the number of shares outstanding, which then again, if you have the same amount of people who are chasing a fewer asset, the stock price rises. So typically when companies do buyback.
Oh, don't forget about the point when you talk about a couple of reasons for buybacks is voting control.
That's yeah. Okay. Yep. That's another great point is that buybacks is typically an investment for a company because they feel like the shares are undervalued, but also as Brent said, voting control. The more shares that the company owns, they'll control more of the voting rights, right? So if you have like these quote unquote activist investors that come to a stock, and what they do is they go on the open market and buy up shares to try to get voting rights. Well, like Brent said, if a company sees that happening and they're like, well, crap, we don't want XYZ person to have any more say in our company than we do, they can go on the open market, buy more shares to get themselves more voting rights. So yeah, that was a great point. I didn't think about that one. But voting rights is a big.
You all missed it. Leon just did air quotes. So when Leon does air quotes, that means he doesn't. Okay, so another thing. All right, go ahead.
All right, so the fourth bullet. This is the kind of the biggest reason, not the biggest reason, but I think it's the biggest effect buybacks have on stocks. Is what it does. It raises a company's EPS or earnings per share. Now, the reason this is important is because one of the main reasons people buy stock is for the company's profits, right? So the more profitable a company is, the more typically the price rises because people see a profitable company, they want to buy that company because it'll be around in 10, 20, 30 years. But also when companies see that when individuals see that a company's earnings are rising at a fast clip percentage wise. Well, that's another reason they want to jump in and buy stock. So an example of this is, so let's say a company has 1 million shares outstanding. And let's say that company also earns $300,000 in earnings or profits, let's say in a year. Their earnings per share is going to be 30 cents. And the way the calculation works is simply take the $300,000 in earnings or profits divided by the 1 million shares, you get 30 cents, right? So 30 cents they've 30 cents, they've earned, their EPS is 30 cents per share. Now, but let's say a year later, the company does a buyback, right? They buy back 200,000 of their own shares. So going into next year now, they only have 800,000 shares outstanding. So when you do the same calculation, 300,000 divided by 800,000 shares outstanding, their earnings per share now is 37 cents per share, or that's a 23% increase in EPS in 1 year. Now think about that. If you saw last year, if you say this year, you're looking at XYZ company, and you see, oh wow, their earnings per share rose by 23 cents, 20% over a year. That's really good, right? Because as I always say, companies are considered growth companies when their EPS rises by about 20%. So if you see a 23% rise in earnings, you're going to be more apt to buy that stock. Now, most investors don't look into things like buybacks. They don't look into the reason why that increase happened. They'll just see the headline number, say, oh, 23% rise in earnings. That's a solid company. Let me buy that. And this is another reason why companies like buybacks is because it increases their earnings per share, which then gets investors excited and it has investors buy more of their stock, which again bids up the price of the stock. So buybacks are a very, very powerful and very, very powerful thing. And the reason I say earlier that this is the way that companies pay us back, kind of like a dividend, but it is actually more powerful than a dividend because a dividend is only going to pay you, let's say 3% a year on what you invest, right? But through buybacks, because it's the appreciation of the stock itself, that can be anywhere from 20, 30, 40% that you'll see in gains based on the whole buyback thing where the company comes into the market itself, drops, $200 million to buy back some of their stock. The EPS rises by 20, 30%. That drives investors into the stock. And then just the scarcity of it, the fact that there's less shares out there that the same amount of people or more people are chasing, that's going to bid the price of the stock up too.
And Leon, you said something real important. It makes for a great headline. It makes for an amazing headline. And some of the people who read these headlines will just go head in and buy and, drive up the price because there's a scarce number of shares outstanding. But this kind of goes back to like the stock splits, but it's just kind of a reverse of that, right? And in that space, when you have a buyback, you actually own less shares than you would otherwise. So depending on how and this also depends on how they do the buyback. We should actually deconstruct this topic because it's a lot of.
Well, no. Okay, no, you as an individual wouldn't own less shares. It's just the
less shares outstanding. Yeah,
less shares outstanding. Right. Yeah. Mm-hmm.
So when they get the shares outstanding, and which is why I said we should probably do something on it. Like It's a certain number of shares that are float. And depending on where they buy the float from or how they buy back the shares, they can actually put out, I think it's called a call. Are you familiar with this process, Leon? They put out a
What's that?
call, and when they do the proxy, they can send out a note in the proxy saying a buyback is coming if you want to show your shares back to the company, like
Oh
call
yeah,
this
yeah,
number.
yeah.
So that's like a direct system. And I know most people watching this have never, number one, read a proxy from a stock company. And I believe I have one. So I think if we kind of like peel back the layers a little bit, you can see how it plays out, because sometimes regular investors like you and me actually have the ability to sell our shares back to the company, which thus would reduce our number of shares. Um, it's an interesting process. So yeah, we should talk about it some more.
Yeah, like yeah. So like what Brent was talking about is interesting. Yeah, so companies will, yeah, they'll put out like a proxy and say, hey, look, we're doing a share buyback. So if the stock right now is trading at $100, they'll come in and say, hey, we're doing a share buyback at say $103.
Yep, they'll give you
So
more than what
yeah,
the stock is worth.
yeah, they may give you a little more. They typically will give you a little more than what the stock is actually trading in the open market. And they're doing that because in their internal models, they know that the stock is worth, well, they feel like the stock is worth, say, 120, but it's trading at 110. So they don't mind giving you $103, $105 for your shares. So yeah, that's another way that buybacks work as well. And that actually can be in conjunction with also going on the open market and doing what like we presented here, is that they just go on the open market and buy back hordes of shares. They can also proxy their current investors too. And I think, like Brent said earlier, the way that's more along the lines that they're definitely trying to get voting rights, because they want current shareholders to have less power if they're trying to gain more power from current shareholders. So that was definitely a good point. So so just real quick, just to kind of wrap this up. This is another way in which companies pay us back. This is more of an indirect way versus dividends, because this whole what you're seeing on the slide, this one was it 5 or 6 bullet points. This is the buyback process. And this is really, really powerful. Like we're showing, it can help really raise the price of stocks. And again, this is over time. We're not talking, overnight, because typically when these companies do these buybacks, like I said, they're dealing with hundreds of millions, sometimes even billions or tens of millions of dollars, and maybe millions of shares. So this takes a long time to happen. But again, it's sustained buying over weeks, months, and years, which is great. We would love to. I would love to own a stock that I know anybody is buying day in, day out for the next year or two. But the point I want to make, the point I was talking about earlier, that just astonished me was, most of this information I have here was through May of 2019, right? So I'm going to kind of give some numbers. So between 2011 and 2019, May of 2019, the stock market was up 125%. Now this gentleman named he's a strategist named Ed Klitzold from Ned Davis Research. He went back and crunched all the numbers, and what he did was he basically looked at the market and said, what would happen in the market? What would be the return of the market over that 8-year period if there were no corporate stock buybacks? Right now, remember, over that 8-year period, 2011 through May of 2019, the market was up 125%. His numbers, based on his calculation, said that in that 8-year period, without stock buybacks, the market would only be up 2%. 2%. Now that shows you how now, and I've heard this before from other analysts. I've read about this. I've seen other analyst reports saying that a lot of times, a lot that moves the market are corporate buybacks. Because think about it. Like Brent and I always say, how we're the quote unquote little guys. We don't actually move a market, right? We can't actually move a price, but we're chasing like the hedge fund guys because they're the guys with the big money. But the guys with the biggest money are actually the companies that issue these stocks that are worth tens of billions, hundreds of billions, even trillions of dollars. And when they drop their money into the market and buy back all these shares again because they think it's undervalued, or as Brent said earlier, they're trying to get more control. They're putting in way more money than even hedge funds. So like I said, according to this guy, for the 2011, 2019, 125% move in the market itself. Without buybacks, according to his calculations, the market would only be up 2% in that same time period. So why this is important to us as investors? This could be something that you add to your checklist when you're looking for good sales, good profits, good management. If you also look for a company that has a buyback program in place and look at the size of the program, money wise, that can be a really powerful thing too. Because as we're showing here, when companies buy back their stock over time, they generally go up because that's sustained huge money going to that stock day in and day out, year in and year out. So stock buybacks is something that I actually haven't looked at. I've looked at it in the past. It's not something really on my checklist, but after doing this research, it will be now, because I definitely see the power behind stock buybacks, and I'm gonna add this to one of my checklists.
Yes, the question just came in: are buybacks required to be reported? In most cases, not only are they required to be reported, but they're voted on, so to be allowed. So, number one, you can call the investor relations line for most large corporations, and they will literally kind of walk you through what the buyback program is. Two, now it depends on the buyback, and depends on how they're doing it. So if they have a program like Leon said, by default, that's going to be listed in their investor relations section of the website, or if you contact investor relations directly. However, if it's a program where it's I guess it's not public, it's not a forward-facing program, and the corporation has just made a decision they're going to buy back their shares whenever the opportunity presents itself, they're just an investor. So in that case, it's not necessarily public notice, but it's also not being treated as a traditional buyback. So I don't want to, confuse that answer, but I do want you to be aware that if a company just decides to buy back their shares, they're not required to report that. Now, if this is for a purpose or they sent out a proxy, yes, that is registered with the SEC. That is something that is public information.
And I also think it depends on the size too, because I mean, if a company's going out there and dropping, $500 million to buy back their stock, they're going to have to report that. But just because the size of that buy and the size of that money, it has to be reported. I think it depends on the type of buyback and the size of the buyback, if it's reported or not. That's something to check to we always say, do your own research. That's something you actually look up to see what actually stipulates when they report it. But I know typically these the brand name companies that we know, they do huge buybacks. They're typically doing hundreds of millions or billions of dollars in buybacks. So typically they'll be reported, and a lot of times they'll have like I said, buyback programs that are going on for years. I mean, they'll buy back stock. They may buy back I don't know, $100 million worth of stock every year for the next 10 years. So those have to be reported. So like Brent said, yeah, you can check the investor relation line at the company that you're interested in, or just Google it. Just Google the company name and stock buyback. A lot of times, you'll be taken to their investor relations site or an article about their buyback. But it's typically public information.
Yeah, and I'll say I'm with Leon. I think unless it's a smaller company, I would say with a market cap under 25 million or something. I mean, it's not showing up on anybody's radar. And most of the time, if a company like that is buying back stock, they're doing it because the acquisition's coming up, or they want to seem more attractive to somebody that's going to acquire them.
Or like you said, I mean, a company with that small market cap, it might be because they're trying to boost their stock price so they don't get delisted.
Yeah. It depends on the situation. The situations vary quite a bit. But what Leon and I talking about today, the information Leon presented is mainly talking about the bigger companies, ones that S&P 500. Not we're not talking about companies that are like OTC or on pink sheets, which are really small companies. But I will say this information actually, even for me today, and with that question Jessica just asked, is making me think, Leon, we should probably have a conversation about creating a topic inside of the IEA community that kind of identifies companies with long-term buyback plans in place, and just start to list some of the names of the companies and links to those buyback programs.
Yeah, because I mean it's a very powerful mover of the market in general, and definitely individual stocks. And like I said, if a company's buying back $100 million worth of their stock for the next 5 years, that's there's a sustained buyer in there, huge sustained buyer in there for years to come. So yeah, that's a good idea. We definitely can do that.
Yeah, okay, we're on it. So yeah, thank you for that question. And this is great content. I mean, even sometimes we like halfway through, him and Leon and I are like, maybe we should do more with this.
I mean, like I said, I knew buybacks were a thing, but I didn't know they were this powerful. So this would definitely be added to my checklist of things. I don't think this wouldn't determine if I bought or not, but I'm definitely going to add it to my list of things to look for. If a company does have a buyback program, that's just more of a reason for me to buy it. Yeah,
for me, it just means that the company has a stronger balance sheet, right? Because companies would, again, in most cases, companies with really weak balance sheets don't go off and spend hundreds of millions and billions in some cases to buy back their stock. It wouldn't be worth it to them. It wouldn't make financial sense, because even with the buyback program, that's an expense on their books. So it's still money going out to get equity in, but it needs to be accounted for. So it could look like a huge expense for a company. So you're not you're not going to have a weak balance sheet doing something like this. So
yeah, that's a good point. So think about it. If a company pays a dividend and has a stock buyback program,
yeah,
that's huge. I mean, that company's balance sheet, that company is in a strong financial position and may be worth investing in.
Actually, this is like an epiphany I'm having right now.
Yeah, me too. I'm like, yo, I didn't think about it. I was like, yo, they have a buyback and a dividend?
And I'm sitting here like, and if they're sending out their proxies, I was like, my mind's going crazy right now. I'm like, oh, okay, yeah, we just changed the game. So yeah, we're definitely going to do we're going to have information about this inside the platform, because honestly, I just want it. So with this being said, everybody still do your research, understand that when you're investing. And also, this is, let me give a little sidestep. This is why it's really important to have conversations like this and to be in these ecosystems. Even with us producing this content, until like moments ago, we didn't think of how powerful it would be to like do some more research and actually add it to our analysis of, a company's strength. And so when you are talking amongst individuals who understand this information, or at least are bringing it up, because how many times are you sitting around with your friends and you're like, hey, what's going on with that recent stock buyback program?
Stock buyback, right? This is not general conversation typically.
It doesn't happen. So and even for Leon and I, during this live, we both kind of had an epiphany, like, why have we not been talking about this more often? Right. And we both had known about it for over 20 years, because I remember this from like the first couple proxies I received. But anyway, this is why I hope that you are a member of IEA and stay a member of IEA. We have a really high retention rate. But aside from that, check the information, have the conversations, make this part of your learning process, because these things really will make you more money over the life of you being an investor. So yeah, this is great information. Now, for anybody who is interested in joining IEA, yes, you missed the membership discount. However, you're still in a good position, because it's still a great value to join Investing Education Academy. You can go to IEAmembers.com and sign up. You can go to IEAnow.com and sign up. If you're interested in learning more about cryptocurrency, we had an amazing conversation yesterday. Was yesterday, day before yesterday, about cryptocurrency? Monday.
Yeah.
And, is a lot of information. I think one of the cryptocurrencies we chose between Monday and like today, or like last week, is up 14%.
No, 44%.
That's crazy. That's crazy. It's crazy.
In a week, yeah.
And so, I mean, the portfolio of some of the recent picks in the IEA Crypto Bulls platform exceeds 260 or 275% rate of return last month. So, I mean, if you guys are wondering like what's happening over there, a lot. That's a lot.
Yeah.
But the market in general, we want you all to be in the market. We want you to educate your children about it, talk to them about it, and talk to your parents about it, because it's important. That being said, is there anything else, Leon?
Nah, I just encourage everyone to take this research, kind of digest it, and then, as we always say, do your own research, but also maybe add this to your checklist of items that you look for when you're looking for stock, to see, one, if they pay a dividend, and or two, if they have a stock buyback program. Not saying that's the reason to buy the stock, but it can be an added benefit if you do buy the stock.
Yeah, and for anybody who's looking for our stock picks, we are going to put them into our Facebook group, Investing Education Academy. If you are on Facebook, you can just search Investing Education Academy, and you can find us, and we'll be posting. They'll be up before tomorrow, probably tonight, but definitely before.
Yeah, they'll be up a little later tonight.
All right, cool. Everybody, thank you for being with us. We are signing off. This is great information. So Leon and I have some research that we have to go back and do on our own.
Right.
And we'll be probably making some purchases as a result of this. So we look forward to seeing you all next Wednesday.